Oh, okay, folks. How are you doing? Hopefully, you're all doing fine. All doing okay. So the last time that I chat with you, I talked about the new week opening gap, something like this. This is what we call a new week opening gap. Okay. So how are you going to use it? It's very, very simple. You're going to grade it. So you're going to use the closing price and the opening price. So the closing price of this candle, because it closed bearish. So it's this, and this is the what? The opening price. It also closed bearish. So this is your opening price, your closing price, then this is your opening price. So what do you wanna see here? You wanna see any type of candle closing below or closing above this C of this range. That's how we are going to use it. And for your own benefits, you are only going to target that at the buy side liquidity or the sell side liquidity, depending on which side of the depending on which side the market is likely to go, or depending on your buyers. Okay. So sometimes you might wonder, mm, what are things that you want to look for whenever you're getting into a market? Like, what are things to look for when you just open your charts? So let's say you go to higher time frame. When you go to higher time frame, what are you looking for? You're looking for where the price point is for the first time. Okay, where is the price point? This is the price point. What do we have above it and below it? So below it, we have got this turning point here, which will be a source of liquidity, which is here. Then where is buy side liquidity? So we have got buy side liquidity, which is here. Okay. So at this point, so now wait. What is the most likely thing to happen when you are seeing a rise like this? The likely thing that is going to happen is this is buy side liquidity to be taken out first. Then you wait. If this buy side liquidity is taken first, what is the market likely want to do after you take out the buy side liquidity? Is it going to close below or above? If it closes above, then the likelihood is it will continue to go to the upside. If it closes below, it's like liquidity soup. Then you wait for shift what? Shift in market structure. Then when you wait for shift in market structure, that's what is going to tell us uh, that you are likely to go to come back to this suicide liquidity. Then you enter using anything that you are seeing. It might be a favorable gap, it might be a what, or whatever it might be. Okay. So those are some of the things that you must look at. What are the characteristics of an order block? What are the characteristics of an order block? Okay, I took these three down close candles, 1, 2, 3, as an order block. Why? Because if I want to modify it and make it just a simple one, I will just go for this last. This is the last down close candle, okay? This is the last down close candle, or this is the last a candle which closes below. Okay, this is the closing point. As you can see, it closes below every candle that come up after this one. Okay, This candle is the last down close candle in this up move. As you can see here, it closes below this one, this one, this one, this one, and this one. And when you want to see here, you'll be able to see the market. Then the market came back to it here and it went up. And it also came back to it here and it went up. Okay, you might want to use all these ones as it is. It's still okay. But if you want to refine it, you are going to use the last candle that closes, okay, below every other candle with a body. Okay, so that's another thing that you must look at whenever you want to take your entry. Or in this scenario, we have got liquidity sweep. These are relatively equal lows here. So we have got a liquidity sweep here. Then we wait for shift in market structure. Where does shift in market structure done? Here. At this point, then the market came back into the what? Into this range here. They need to what it goes automatically. So those are some of the things that we might want to look at. Okay. So as you can see here, we have got relatively equal lows here, we which the market came back for. Okay. So relatively equal lows, uh, those points are sweet spots whereby the market is going to come for those points and violate them. Okay, and violate them so rapidly. So we want to look for those points and make sure that the market will automatically what? Or automatically send back for it. Then you yourself, you must have an entry criteria targeting those areas. Because those areas, they are very, very perfect and they are very good for you to what? For you to be able to take take your interest. As you can see, these are relatively for what? Equal. So there is smooth buy side liquidity which is racing above these lines. So these are some of the things that you must look at. Okay, whenever you are analyzing your what? Your charts. It it has got something to do with time. It's not every time that you are going to take your entry and then find a very, very good entry. No, some of the time of day it might be not good for you to take your entries, and you must wait for very, very good confirmation. Confirmation that are very, very good confirmations is liquidity sweep number one. Then number two, after liquidity sweep, you will then wait for shift in market structure. You won't go wrong. If you just deal with the liquidity sweep, then shift in market structure, you won't go wrong. All right. So till we meet again, folks, it's bye bye for now.